posed against the company by, of course, one of the media agencies. Mr. Selvan, first off, at the outset, you have come out, you've clarified through an analyst call yesterday that all of these allegations are largely baseless. What is it, in your opinion, that could be a challenge with regard to some of the questions posed against Chola? Would you say all of them are baseless altogether?
Yeah, as you could see, there is no consistency in the way they have even approached these allegations. They have used for different points, different sets of years to sort of inflate numbers and show them in the as if there is a larger issue at hand. And they have completely not factored in that what is the law today was not the law at earlier points in time with regard to disclosures on the related party, etc. And at every point in time, the company had made sure that it is in compliance with the law prevailing at that point in time. This is what we can do because the company cannot predict what could be the law in the future and then be compliant about it ahead of it. We always are slightly always more careful, but these are certain disclosure related issues which we have done as per the prevailing law at that point in time. Now, on hindsight and taking current law or current disclosure norms and saying that these have not been disclosed earlier is a complete misnomer. So this is just to create attention or do some other mischief that is unnecessarily creating time and effort of all concerned. But what to do? It is part and parcel of a democratic process in India.
Indeed it is. But Mr. Selvan, want some clarity here. The fact that, there were allegations made that funds were allegedly diverted via the insurance arm. Tell me, what was the commercial rationale regardless of this 3,040 crore transfer from Cholamandalam MS General Insurance to other Murugappa group entities?
The Cholamandalam MS is a general insurance company which is, issuing or offering insurance products to various companies. The larger part of the transactions happens with Chola Finance itself, where we do a lot of insurance to our customers through them. For example, we are a large vehicle finance, financier, and so we do motor insurance. We do hospitalization insurance for our borrowers. We do life insurance cover for our borrowers, though that comes under a HDFC or ICICI type of insurance offerers. Now, this we do for two reasons. One, we as a group policy, we could offer products to the customers at much cheaper rate than what they would have directly got if they are going and wanting to cover themselves. And it helps them to tide over during points of emergency, whether where they are hospitalized or the vehicle meets with an accident or in the untimely or in the unforeseen event of a death of the borrower himself. So both the family of the borrower is relieved of their responsibility to offset the loan because the insurance company pays back these costs. Then even in case of small medical emergency, etc., even the EMIs, most of our customers are earn and pay customers for even 1 month of failure for them to operate their vehicle. They will be in difficulty to pay their EMIs, and these medical insurance helps them cover their cost and makes them able to enable them to service the EMI. So from that context, we do the coverage of insurance for these customers, and these premium are paid to them. And like in any transaction, the commission that needs to be paid is paid back by Chola to us. So this is what is the transaction. And at various points in time, this insurance agency had been done through different companies because it makes sense to have the agency separate versus keeping it in the main company. This has also been now corrected or changed based on the IRDA regulation changes. We have now become, Chola itself has become the insurance agent. So I think from a year or two back, we have started booking the insurance directly in our books as well, instead of going through a group company.
Understood. But there's one thing that I do want to talk about here, Mr. Selvan. The allegation on payments to family members and auditors, which was flagged off as too high. Tell me, what is your own independent assessment as a professional in the company of the remuneration and the fee structures for KMPs, board members, auditors, relative to industry standards and best practices?
I think it is good for others to do this comparison and to say that is our family members have been paid more. First of all, most of our family members who are holding executive positions in various companies or people of who are involved in the business, they contribute to the business, and it is not like a promoter who is sitting in a non-executive position. They participate, and their participation is visible in the interactions with the media, with the others. You would have seen our chairman currently as one EY award, etc. So they are people of complete business. They handle the business every day, and they are paid commission or salary based on industry standards. These are all gone through board clearance, shareholders clearance, and they are paid. The other part of the transaction which people have alleged is that there is a Murugappa Management Services where we have paid them. This is a setup we had earlier, where at a group level we had a Murugappa corporate board, and we had both internal and external experts handling this board, handling a large part of. At a group level, the finance function, there was a group CFO, there was a group HR head, group IT head, all external people who had brought in expertise, who had made sure that there is a commonality of approach across the group. And for this, there had been a payment. From FY22, this setup had been sort of demerged into three broad verticals, which is handled by Mr. Murugappan on one side, Mr. Velayan on one set of industries, and Mr. Alagappan on the other set of industries, because the volume and the size of operation has become so large with the expansion across all the companies in the group becoming larger. Then that's where when this Murugappa management structure was sort of brought on from these experts being trying to have a common approach across all the verticals. Instead, each group has started building their own approach. So that's where you'll see certain reduction in the cost paid to the Murugappa management services post 22. Unfortunately, they seem to have not understood these things. They could have had a discussion with us, but instead they have drawn their own conclusions and sort of created a unnecessary, issue at hand.
Mr. Selvan, you've largely brushed off pretty much all the allegations, but one piece which I'd want to quickly cover is with regard to liquidity. Talk to us about how much cash and how much liquidity are you sitting on, whether you believe that that's efficient enough if there is some excess liquidity in your system. And is there at all a risk of an ALM mismatch, if I can call it that?
No, I think there are two different parts. The allegation refers to cash collections being made and deposited into the bank. Now, I'll explain that. All our customers are either small road transport operators or self-employed non-professionals who earn and pay, and most of their earnings come in cash. So we collect the cash from them collect their EMIs from them by way of cash every month. These individually are very small transactions because their EMIs are small numbers for small vehicles or small, unsecured or secured loans. These collections are accumulated and deposited in various banks, which they seem to have thought that there is a lot of cash transaction. This is a standard practice across NBFCs, especially in the portfolios which we handle. The liquidity position you are talking about is certainly not cash of physical cash being there, but it is cash. It is a liquid, what we call as a HQLA. This is the liquid assets which are kept in mutual funds, in overnight funds, or in short-term deposits, or in fixed deposits with banks. Well, currently we are having 14,000 crores. We invest in GSEC, which is a liquid asset. We invest in state securities, which is again a liquid assets. This we need to keep it in these assets as per RBI norms to make sure that at any point in time, if that is a requirement to encash, we could bring cash quickly by either unwinding these deposits or unwinding the mutual fund investments in these schemes, liquid schemes or in overnight schemes, and making sure that there is no default where company has to pay. Our ALM is always positive across time buckets, though regulation allows us to be negative in certain time buckets.
No, absolutely. So I meant cash and bank balance itself. So I didn't technically mean cash. So, but yes, given the context, I understand why you clarified. So that makes a lot of sense. Talk to us about the guidances that you've spoken about. 20 to 25% growth. Does that continue unabated? Is there absolutely any concern there? Also, give us a flavor or a texture with regard to how CV is shaping up, especially post-GST, post the GST rationalization. Has the growth been stronger? Certain indicators seem to suggest it. What are you seeing on ground? Because you have a great pulse of that.
Yeah, so post GST, there have been certain segments in vehicle finance which have shown better growth, but there is still segments which are yet to pick up. As I reiterated earlier, also the GST benefit is here to stay, and people who are wanting to buy vehicle, they will time it as per their requirement rather than wanting to make a quick purchase, because this is not going to go away. So they will go with their normal purchasing plan. So you will see, we are seeing the growth or the pickup happening in the more in the discretionary spending or the consumptive side, which is in the case of two-wheelers, passenger cars, and in the case of consumer durables, etc. However, the heavy commercials, or in the case of even CVs as a whole, well, it had been positive. It had not been a very significantly larger number as originally expected. But having said that, our disbursements in Q3 across various products which we handle is showing a very good positive trend. And I don't want to divulge the numbers now, but yes, we should be in line with the expectations we have set in the past.
Mr. Selvan, CV side, is the growth far stronger than you anticipated?
On CV per se, it is not, if you are saying as anticipated, it is slightly lower, but it is better than what it was in Q1 and Q2.
Fantastic. Okay, thank you so much, Mr. Selvan, for joining us. We'll let you go on that note.
Thank you.